In a world where financial uncertainty has become the new normal, where inflation eats away at savings and job security feels like a relic of the past, the question of how to build lasting wealth is no longer academic, but urgent. And this is where the philosophy of rental property investing enters as a lifeline, offering not just the promise of passive income, but the possibility of financial independence. Because unlike volatile stocks or fleeting business trends, real estate is tangible, it is brick and mortar, it is roofs over heads, and it is demand that never disappears. And the book, Rental Property Investing, positions itself as a roadmap for ordinary people to step into this extraordinary opportunity, showing that you don't need to be born into wealth or have insider connections to create a portfolio that pays you month after month, year after year. And in this opening chapter, we confront the high-stakes reality. The modern problem this book solves is the erosion of financial stability in a gig economy where most people trade time for money. And the hook is simple yet powerful. What if you could stop working for money and instead make money work for you? Not through speculation, but through a system that has been tested for centuries, the ownership of property, leveraged intelligently, managed strategically, and scaled methodically. And this is the foundation upon which the rest of the journey will be built.
The first principle that rental property investing hammers home is deceptively simple yet profoundly transformative. Cash flow is king, because while appreciation and tax benefits are attractive, they are speculative. But cash flow is immediate, measurable, and the true engine of financial freedom. And the book insists that every property you consider must be evaluated not on its glossy brochure or neighborhood hype, but on the hard numbers of monthly income versus expenses. Because the difference between a winning investment and a financial trap is often hidden in overlooked details like maintenance costs, vacancy rates, and property management fees. And here lies the genius of this principle. Cash flow is not just about covering your mortgage, it is about creating a surplus that can be reinvested, scaled, and eventually replace your active income. And to illustrate this, imagine two investors. One buys a trendy condo banking on appreciation, while the other acquires a modest duplex with steady tenants. And when the market dips, the condo owner bleeds cash, while the duplex owner continues to collect rent, proving that cash flow is the shield against volatility. And this chapter challenges viewers to adopt a mindset shift. Stop chasing speculative gains and start building a portfolio where every property is a cash-producing machine. Because in the end, it is not the number of doors you own, but the reliability of the income they generate that determines whether you achieve true independence. The second principle that transforms ordinary investors into extraordinary wealth builders is the power of leverage. Because in real estate, unlike most other asset classes, you're allowed to control a large property with a relatively small amount of your own money. And this ability to use other people's money, primarily through mortgages, creates a multiplier effect that accelerates wealth creation. But leverage is a double-edged sword, and the book emphasizes that it must be wielded with discipline. Because while a well-structured loan allows you to acquire properties that would otherwise be out of reach, reckless borrowing can turn opportunity into disaster. And the key lies in understanding the balance between debt and cash flow, ensuring that every leveraged property still produces positive monthly income after expenses. And to illustrate this, imagine an investor who buys a $200,000 duplex with only $40,000 down, and through tenants' rent not only covers the mortgage, but generates surplus cash, effectively building equity with other people's money. And this is the essence of leverage. It magnifies your returns while minimizing your upfront capital. And when scaled intelligently, it allows you to grow from one property to five, from 5 to 20, without waiting decades to save.
And this chapter challenges viewers to stop thinking of debt as a burden and start seeing it as a strategic tool, provided it is backed by cash flow discipline. Because leverage is not about gambling, it is about accelerating the inevitable march toward financial independence. The third principle that separates amateurs from professionals in rental property investing is the importance of systems and management. Because while buying a property may feel like the victory, the truth is that wealth is built not at the closing table, but in the daily grind of operations. And this book insists that without systems, even the most promising investment can collapse under the weight of inefficiency, tenant issues, and unexpected costs. And the key insight here is that successful investors treat their portfolio like a business, not a hobby, meaning they establish repeatable processes for screening tenants, handling maintenance, tracking expenses, and enforcing leases. And this discipline transforms chaos into predictability, allowing the investor to scale without drowning in stress. And to illustrate this, imagine two landlords, one who manages everything ad hoc, scrambling to fix problems as they arise, and another who has a property manager, automated rent collection, and a clear maintenance schedule. And when challenges inevitably appear, the first landlord burns out while the second barely flinches because systems absorb shocks. And this chapter challenges viewers to stop thinking of themselves as property owners and start thinking of themselves as CEOs of a rental business. Because management is not about micromanaging tenants, but about building a machine that runs smoothly, whether you are present or not. And in the end, systems are the invisible infrastructure that turns rental property investing from a side hustle into a scalable empire. The fourth principle that defines successful rental property investing is the role of market knowledge. Because while cash flow and leverage are universal concepts, their application depends entirely on the local market in which you operate. And this book stresses that ignorance of market dynamics is the fastest way to lose money, because real estate is not a monolith, it is hyperlocal, and what works in one city may fail in another. And the investor who blindly follows national trends without understanding neighborhood-level realities risks buying properties that look good on paper but bleed cash in practice. And the key insight here is that market knowledge is not just about knowing average rents or property values. It is about understanding the deeper forces: job growth, population shifts, school districts, crime rates, and zoning laws that shape demand and stability. And to illustrate this, imagine two investors. One buys a rental in a declining industrial town where jobs are vanishing, while another buys in a growing tech hub where demand for housing is exploding. And while both properties may cost the same, their outcomes diverge dramatically, because one faces vacancies and falling rents, while the other enjoys appreciation and tenant stability. And this chapter challenges viewers to stop thinking of real estate as a passive game and start treating it as a research-driven discipline. Because market knowledge is the compass that guides every decision, ensuring that your portfolio is not just profitable, but resilient against the tides of economic change. The fifth principle that anchors the philosophy of rental property investing is the long-term mindset. Because while quick flips and speculative plays may look glamorous on social media, the reality is that true wealth in real estate is built slowly, steadily, and deliberately. And this book insists that patience is not optional, but essential. Because rental property investing is not about chasing instant gratification, but about constructing a portfolio that compounds over decades. And the key insight here is that time is the most powerful ally of the disciplined investor, because rents rise, mortgages shrink, equity builds, and appreciation quietly accumulates. And to illustrate this, imagine an investor who acquires a modest fourplex today, and while the cash flow may seem small at first, over 10 years, rents increase, the mortgage balance declines, and the property's value appreciates, creating a triple engine of wealth that compounds silently in the background. And this is why the book urges readers to resist the temptation of short-term thinking, because the investor who panics at every market dip or sells too early forfeits the exponential rewards that only time can deliver. And this chapter challenges viewers to adopt a mindset of endurance, to see rental property investing not as a sprint, but as a marathon, because the true measure of success is not how much you make in a year, but how much you build in a lifetime. And in the end, the long-term mindset is the invisible force that transforms ordinary investments into generational wealth. To prove originality and depth, rental property investing does not exist in isolation, but must be weighed against other popular titles that dominate the financial bookshelf. And when compared to Rich Dad, Poor Dad by Robert Kiyosaki, the difference is striking. Because while Kiyosaki inspires readers with the philosophy of escaping the rat race, he often leaves them hungry for practical steps, whereas rental property investing delivers a tactical blueprint grounded in numbers, systems, and execution. And when set against The Millionaire Real Estate Investor by Gary Keller, the contrast is equally revealing, because Keller's work emphasizes mindset and the collective wisdom of successful investors. But Brandon Turner's book drills deeper into the mechanics of cash flow analysis, leverage strategies, and property management, making it less about inspiration and more about implementation. And when viewed alongside the book on managing rental properties, also by Turner, the synergy becomes clear. Because while the management book focuses on operations, rental property investing provides the strategic framework for acquisition and scaling. And this critical analysis demonstrates that Turner's contribution is not redundant, but complementary, filling the gap between motivational theory and operational detail. And this chapter challenges viewers to recognize that originality in commentary is not about dismissing other works, but about situating this book within the broader conversation, showing how it advances the dialogue by offering a complete system that bridges philosophy, strategy, and execution, making it indispensable for anyone serious about building wealth through real estate. The book does not stop at theory, but translates its principles into a practical 7-day action plan, because knowledge without execution is wasted, and this plan is designed to give viewers immediate momentum, proving that rental property investing is not reserved for experts, but accessible to anyone willing to act. And day one begins with education, committing to read and absorb the fundamentals of cash flow analysis and leverage, because clarity precedes action. And day two focuses on market research, identifying 3 neighborhoods with strong rental demand and stable job growth, because location is destiny. And day 3 is about networking, reaching out to local agents, property managers, or investor meetups, because relationships open doors that numbers alone cannot. And day 4 shifts to financial preparation, reviewing credit scores, savings, and loan options, because leverage requires readiness. And day 5 is about property scouting, analyzing at least 5 listings with a focus on cash flow rather than speculation, because discipline filters opportunity. And day 6 is about simulation, running the numbers on one property as if you were buying it, calculating rent, expenses, and cash flow, because practice builds confidence. And finally, day 7 is about commitment, setting a timeline for your first purchase, because without deadlines, dreams remain fantasies. And this action plan challenges viewers to stop waiting for perfect conditions and start building momentum, because the journey to financial independence begins not with a leap, but with consistent steps taken one day at a time.
At this point in the journey, after exploring the principles of cash flow, leverage, systems, market knowledge, and the long-term mindset, the book transitions into a practical bridge that connects viewers not just to ideas, but to action. And here, the affiliate mention is woven naturally into the narrative, because while the strategies outlined are powerful, they are only as effective as the resources you use to implement them. And for those ready to take the next step, the full text of rental property investing is available through the link in the description. And this is not a sales pitch, but a continuation of the value, because the book itself provides deeper examples, worksheets, and case studies that cannot be fully captured in a single video. And by accessing it, viewers equip themselves with the tools to move from theory into practice. And it is important to emphasize compliance here. As an Amazon associate, I earn from qualifying purchases, and this supports the continued creation of cinematic breakdowns on @BestBookSummary, ensuring that more content like this can be produced. And this disclosure is not just a legal requirement, but a transparent commitment to integrity, because trust is the foundation of any relationship between creator and audience, and so the bridge is simple yet powerful. If you found value in this breakdown and want to go deeper, the link is waiting in the description, ready to guide you into the next stage of your investing journey.
While the foundation of rental property investing rests on the principle that cash flow is king, the book pushes further by exploring advanced strategies that elevate ordinary returns into extraordinary ones. Because once you master the basics of income versus expenses, the next step is optimization. And this means not just collecting rent, but engineering profitability through creativity and discipline. And one strategy is value-add investing, where you acquire properties that are underperforming, renovate kitchens, upgrade bathrooms, or add amenities, and in doing so, you increase rents and property value simultaneously, creating a double win. And another advanced tactic is house hacking, where you live in one unit of a multifamily property while renting out the others, effectively reducing your own living expenses while building equity. And the book also highlights the importance of tax strategies, such as depreciation, which allows you to deduct the wear and tear of your property on paper, even as its real value rises. And this creates a powerful shield against taxable income. And finally, the concept of scaling through refinancing is introduced, where you use the equity built in one property to fund the purchase of another, creating a chain reaction of growth. And this chapter challenges viewers to stop thinking of cash flow as static and start seeing it as dynamic. Because with advanced strategies, every property becomes a canvas for innovation. And the investor who masters these techniques transforms rental property investing from a passive stream into an active engine of wealth creation. Leverage, as powerful as it is, does not stop at traditional mortgages, because the book expands into creative financing strategies that allow investors to acquire properties even when conventional banks say no. And this is where resourcefulness becomes the ultimate weapon. Because while most people assume you need perfect credit or massive savings to invest, the truth is that creative financing opens doors for those willing to think differently. And one method is seller financing, where the property owner acts as the bank, allowing you to pay them directly over time, often with flexible terms that benefit both sides. And another is partnerships, where two or more investors pool resources, one bringing capital and the other bringing expertise, creating a synergy that multiplies opportunities. And then there's the concept of lease options, where you control a property with the right to buy later, locking in today's price while generating cash flow in the meantime. And the book also highlights private lending, where individuals outside the banking system provide funds in exchange for interest, often faster and more flexible than institutional loans. And these strategies prove that leverage is not limited to traditional debt, but is a mindset of using other people's resources to accelerate your growth. And this chapter challenges viewers to stop seeing financing as a barrier and start seeing it as a puzzle with multiple solutions. Because creative leverage is the art of turning limitations into opportunities. And the investor who masters these techniques can scale faster, smarter, and with less resistance than those who rely solely on conventional paths.
Systems are the backbone of scalability, But the book goes further by showing how automation and delegation transform rental property investing from a stressful hustle into a streamlined empire. Because while managing one property manually may seem manageable, managing 10 without systems is chaos. And this is where technology and people become your allies. Because automation allows you to set up online rent collection, digital maintenance requests, and expense tracking software that eliminates human error, while delegation empowers you to hire property managers, contractors, and accountants who handle the day-to-day grind, freeing you to focus on strategy. And the key insight here is that wealth is not built by doing everything yourself, but by building a machine that runs without you. And to illustrate this, imagine two investors. One spends weekends chasing tenants for rent checks and fixing leaky faucets, while the other has automated payments flowing directly into their account and a manager who handles repairs. And the difference is not just convenience, but scalability, because the first investor is trapped, while the second is free to acquire more properties. And this chapter challenges viewers to stop glorifying the grind and start embracing leverage, not just of money, but of time. Because automation and delegation are the invisible forces that allow you to scale from a handful of units to dozens and ultimately transform rental property investing into a business that grows while you sleep.
Market knowledge is not static data, but a living pulse. And the book emphasizes that true mastery comes from reading economic signals that shape demand before they appear in rental listings. Because while average rents and vacancy rates are useful, the investor who anticipates shifts in employment, infrastructure, and demographics gains an edge that others miss. And this means watching for new highways that connect suburbs to job centers, monitoring announcements of factories or tech campuses that bring thousands of workers, and tracking population growth trends that quietly transform sleepy towns into booming rental markets. And the book insists that investors must learn to interpret these signals like a detective, piecing together clues from local government plans, census data, and even school enrollment numbers, because each is a whisper of future demand. And to illustrate this, imagine two investors. One buys in a stagnant area where jobs are leaving, while another notices a new university expansion and invests nearby. And within years, the second enjoys rising rents and stable occupancy, while the first struggles. And this chapter challenges viewers to stop reacting to markets and start predicting them, because rental property investing is not about chasing yesterday's data, but about positioning yourself for tomorrow's demand. And the investor who reads economic signals correctly transforms uncertainty into foresight, building a portfolio that thrives not just in the present, but in the future. The long-term mindset in rental property investing is not simply about patience, it is about vision. Because while steady cash flow and equity growth create personal freedom, the true power of this strategy lies in its ability to generate wealth that outlives the investor. And the book emphasizes that rental property investing is one of the few vehicles that can be passed down intact, providing not just income, but security for future generations. And this transforms the game from personal finance into legacy building. Because when you acquire properties with discipline and hold them with endurance, you are not just creating a retirement plan, you are constructing an inheritance. And to illustrate this, imagine a family where the first generation acquires a handful of rentals, the second generation inherits them debt-free, and the third expands the portfolio further. And within decades, what began as modest investments becomes a dynasty of wealth. And this is why the book urges readers to think beyond their own lifetime, to see each property not just as a source of monthly rent, but as a brick in the foundation of generational prosperity. And this chapter challenges viewers to stop measuring success in years and start measuring it in decades. Because the investor who embraces legacy thinking transforms rental property investing into more than a financial strategy. It becomes a gift, a shield, and a future for those who come after, proving that the long-term mindset is not just about endurance, but about immortality through wealth.
As we reach the conclusion of this cinematic breakdown, the message crystallizes into a single truth. Rental property investing is not just about numbers, it is about freedom, resilience, and legacy. Because in a world where uncertainty dominates headlines and financial insecurity haunts millions, the ability to create steady cash flow, harness leverage, build systems, read markets, and think long-term is more than a strategy. It is a lifeline. And this book has shown that ordinary people can step into extraordinary opportunities, transforming modest investments into engines of independence. And the challenge now is simple yet profound. Will you remain a spectator in the economy, or will you become a participant, shaping your own destiny through ownership, discipline, and vision? Because the path is open, the blueprint is clear, and the only missing piece is your decision to act. And if this breakdown has sparked clarity, then the next step is waiting in the description, where the full text of rental property investing offers deeper insights, tools, and case studies to guide you further. And as an Amazon associate, I earn from qualifying purchases, which supports the continued creation of cinematic content on @Best Book Summary, ensuring that more journeys like this can be shared. And so the final call is not just to read, but to act, to commit, and to begin. Because the future will arrive whether you prepare for it or not, and the investor who starts today will be the one who owns tomorrow.